Good day, one. Thanks for joining us here in the charts. You tune into the Crypto Flight Edition. It is your fellow passenger stopping in. We have just two lines actually for the Digibyte. We're just going to make sure that the uptrend is going to continue and that everything is still perfectly intact. We're actually looking at the higher time frames, looking at the RSI and the price action. Super simple. Let's keep it simple. So let's go ahead and dive right into what we have here. All right, that's it. Really simple. So it's just an orange ascending line between the RSI. Here's the relative strength indicator, just showing how much buying activity and selling activity is going on in the market. If you knew, the lower it goes below the 30 level, that means it's getting oversold. And of course, if it's above this level here at about 70, that means a lot of people are buying and it's overbought. Okay, but I just wanted to point out this ascending line and just show you that it's been finding beautiful support at this lower ascending line just below the RSI here. We have like 3 touch points if we just kind of adjust it a little bit there. Yeah, it's perfectly intact. It will likely continue the trajectory to the upside as long as it stays above this ascending line here. And even if it actually gets below, we can actually use that as a cool off period where as long as it has reached higher levels in the price action and it backtests the previous level of resistance, it should be just fine. Let me just kind of get to the price action and kind of show you what that would mean. So obviously the price action has broken above the ascending line here, this kind of orange ascending line right here, and all the price activity that took place below, well, kind of starting out back here January 2019 at like 0.009 cents. It's just below a penny there, where it actually kind of fought with the line twice, found resistance, and it just kind of took enough time to build up the necessary momentum to actually break through that line now. So right now it's actually broken through that level. Again, weekly candles. So I'd say as long as it's staying above this ascending line here, let's just say that, because it appears that markets are kind of under a little bit of pressure, but not really, because the market is still above the previous level of resistance, which can be identified right about there at like 7 cents. So if it actually stays above the 7-cent level, then I'd say that everything looks just fine. If it's going to continue the overall trajectory at the worst case scenario to just kind of break down below this 7-cent level, and depending on when it actually happens, let's just say it actually happens very fast, which if it happens, that would be a little bit concerning for me. And the reason that I say that is because I'm always looking at the time frame that it takes for the buyers and the sellers to make a move in the market. So for example, so something like this red candle. Remember, what we do on the channel, we focus more on the technical data and like we don't really go over any fundamentals. But we do our best to understand the price action. So, for example, if you take this red candle, this weekly candle here on February the 22nd, 2021, notice how it only took 1 week to push the price down all the way back to this resistance level, which should act as support now. And the next following weeks, it took 1, 2, 3, 4, 5 weeks to push the price to the upside through the all-time high. So let's just say, like, for example, I just given you an example of 5 weeks that it took to make a bullish counter move, right? I mean, it's sort of a bullish trajectory, right? But after the market went down from this weekly candle, it took 5 weeks to replenish the market and go higher above the all-time high. Now, let's just say, for example, it only takes 3 weeks to push the price all the way back down to this level. That's a little bit of an interesting sign. And again, the reason that I say this is because I'm always comparing the time, right? Like we've already gone over, like you see the time here. It took 5 weeks to make that move up. So if we go over for the sellers to make their move in the market, and it only takes like 3 weeks for them to actually make a bearish counter move and push the price all the way back down to the support level right here. That means that the sellers may have a little bit of aggressive control or an aggressive opportunity to push the price down a little bit too fast for my comfort, because again, I'm always measuring how much time it takes between the buyers and the sellers to make a move in the market. So we're super ahead of ourselves here. The price activity is taking place above the all-time high, well, the previous level of resistance, at least, rather, here at about 7 cents. So let's let this play out for at least another week. I think there's still like 3 days and 20 hours to close on this developing weekly candle. So yeah, let's just let this play out. Do I think it will continue higher? Yeah, I think it will eventually continue higher, but it appears that we also go over BTC, so be sure to subscribe with us. It appears that BTC is under a little bit of pressure right now. I still need a little bit more time for that as well. I kind of base my final thesis on determining on how the higher time frames close. So again, this is a developing weekly candle, so it's kind of too soon to give any type of price predictions right now. But what I will say is if the price activity continues the trajectory to the upside, what I do is I just kind of take this as like a pause. Like I'll just circle this area here. So if you notice just that, like this kind of clustered area of price activity, this could simply be like a pause in the trajectory to the upside, or like the explosion to the upside, right? Because I think this is up a total of, I think it was like 300% if I measure like from the absolute lows back in March 2020. It actually reaches as high as 2,763%. So that's really good in terms of percentage gains if you guys actually bought back in March. Congratulations to you there. And what I'll do is I'll just take like a simple, super simple trend line and just kind of measure it from the break up. And I know this isn't like a bull flag, the area that I circled. What I'll do is I just kind of like super rough estimate, guys, because I mean, typically when you use like the Fibonacci retracement tool, you're not supposed to use it in crypto, but it actually works in some cases if you kind of adjust your fib levels according to how the price action has performed in the past. I guess I can give you an example of that very briefly here. Let's just erase that trend line for now. And let's erase that as well. And what I'll do is I'll take the Fibonacci retracement tool out to kind of give you an example of what I'm talking about. Okay, and again, most people, I mean, some people actually use the fibs in the crypto markets, but let me just show you something really quickly. So like for an example, what I would do is I would just kind of take this area here, like this circled area here. Let's change that a different color so you can actually see it there. So this area here ranging in between April the 27th over to February the 28th. So I just kind of out path there right over here, and then I'm measuring it from all the way over here. So what I do is with my Fibonacci retracement tool is I measure the highest point. So let's actually erase this. This is probably going to be like a little bit of a long video actually here, now that I'm thinking about it. So I'll just start here and just kind of play this out. So as you see the price action developing, what I'll do is to kind of try to measure an overhead target is I would start from the most recent high that's measurable right here at about 3 cents. And then I'll measure from the most recent low. I actually measure the wicks, believe it or not. This is like down at like a penny, okay? And then I pull up my Fibonacci retracement. So I start from the high and then I measure down to the lowest point. Okay, so right about there. Okay, my Fibonacci is like super boring right now, but I'm gonna pull up the charts here just to show you what I'm talking about. So we're gonna play it out, let the price action just kind of play out there. And when it reaches its highest point, what I'll do is I'll just kind of pull up my Fibonacci retracement tool, so we can actually just pause it right there since we know where the most recent high is. I'm gonna measure this line right here at the orange line, only because the price has gone higher. So I'm just trying to figure out how can I measure on the Fibonacci retracement tool the next level overhead. Okay, so I'll just kind of pull up my fib right here, and I will go into the settings right over here. Let's see here, right about there. And let's see the settings, and then I'll just start actually. So they have like different levels on the Fibonacci retracement tool, and I actually go to the highest setting. We'll just start at like 4 and see where that is. So at 4, it takes it a little bit too high, and I'll just kind of go down the line, something like that, something like that. So somewhere right about, okay, so it's getting too low there, there, and there, right about there. So we'll do something like that. So I'd say that the 3 level on the Fibonacci retracement, super hypothetical, guys. But you see how I just pulled up the 0.088. Like, I'm sure no one uses this on the Fibonacci retracement tool, but this is sometimes how I'm able to measure like crypto targets overhead. So in this example, the 0.0884 level on the Fibonacci retracement tool, let's just say that we actually get another consolidation range, something similar to what has already taken place like over in this area here. And let's just measure how much time it actually consolidated. It looks like we got about 280 days. I'm not saying it's actually going to take that long, but just, you know, say that something like this could take place in terms of the consolidation. It'll extend all the way over. We'll just measure over here from the February the 15th, like right up here at this top here. February the 18th, and extend it on over like 208 days. And that would bring it all the way over to September the 13th, 2021. So this year, I mean, I don't even think that's an extremely long time. And what I will do is, since we only have the reference point from this highest level here, right about, let's see if I can just point it at it, the highest point here. I realize the price has gone higher, but I'm trying to measure like an overhead target. So we'll start at like 7 cents, and then we'll go to the most recent low, which of course it can't go lower, wick lower, right? But let's just use this for reference and close it out. I'll measure the highest wick point, and then I'll put it all the way at the bottom of that wick, and that will bring the price target of a total of like 17 cents just overhead, assuming that what has taken place in the past will take place again, and that we won't have any lower levels, lower than the lowest level that I've measured here at about 0.04 cents. Then it's likely we can, this is measurable. This is how I find targets, which sometimes it's, you know, a good reference point. Sometimes it's completely the opposite, right? But I've just simply measured what has taken place in the past, right? This little small clustered area of consolidating, and we measured our fib from the highest point to the lowest wick, and then we actually got this target, and that's what I've done. I've measured, started from the highest level here, and then of course the lower levels here, assuming that it won't get any lower, then 0.5 cents, okay, 5 cents, and then of course we get the target overhead at about 17 cents. Hopefully that was useful. Hopefully it wasn't like too long and drawn out there for you. So that's all I have for you guys for today on this very lengthy, drawn out explanation on the Fibonacci retracement tool here. So that's it, guys. Take care of yourselves, protect your portfolios. Also, we'd love for you to subscribe with us. We go over the cryptocurrencies every single day. So join us here on this interesting journey. And that's it, guys. Take care of yourselves. Thank you for your time. We're going to talk soon, and bye for now.